Dalal Street, where the bulls ended the trading week on a high, the Nifty closed 0.5% higher and managed to stay above that 10,600 mark. The Sensex also saw gains of over 0.5% in trade, and the broader markets underperformed the benchmark indices today as the mid-caps saw cuts of over 0.25%. The banks continued their upward trajectory and ended the day 0.25% higher. Surbhi Upadhyay is here with the day's trading action. Surbhi.
Well, a good close to a good week. But there are some buts. Perhaps that's how you can sum up Friday's action. So the good news first, the market managed to see a buy on dips today. And in fact, we've ended very close to the highs of the day, with the Nifty once again approaching the 10,700 level. But that is the problem, because that is where it runs into key resistances around the 200 DMA. The other interesting facet of trade today, largely restricted to the bigger stocks, to the large caps, to the Reliances and the HDFC Twins of the world. The mid-cap arena was a little sluggish, and the mid-cap index was underperforming throughout. The market breadth was negative throughout the session as well. Let's talk about the gainers, and we have an unlikely winner today. A 10% move on that stock put it in pole position. It was followed up by consistent buying in Eicher Motors after their Tamil Nadu plant has reopened after the strike. And Reliance Industries, as I mentioned, was quite strong throughout, with almost a 3% gain for the day. Financials were again batting for the bulls, both on the NBFC side and the banking side. So today's key winners included names like Bajaj Finserv, Bajaj Finance, the HDFC Twins, as I mentioned, and even a State Bank of India. What didn't work today? Yes Bank for sure. It's one issue after the next, and now this was Mr. O.P. Bhasan on the stock today. And W Steel and Tata Steel pressure. Housing finance companies have been under strain as well. That was a key facet of the Friday action. So whether it's Indiabulls Housing, DHFL, Canfin Homes, all of these stocks were down and out. Speaking of losers, let's get to some more names on the mid-cap side. PFC and REC on news that the government is going to persist telling REC to buy its stake in PFC. That news did not go down well with both of those stocks. And NMDC under strain again because of regulatory issues, a very important mine for them in Karnataka. Finally, if I float, 6% up move on the stock once again, hoping that we'll get some news from the Tata Sons board meet by the time we come back to trade on Monday. Vodafone Idea and even a Venky's.
Much for joining in with that. Now from markets to crude, oil prices surged in trade, mainly supported by expectations that the OPEC would start cutting supply soon. The Brent is trading over 1% higher at $67 a barrel. Mex is close to 1% higher and trading at $57 a barrel. In the currency market, the Indian rupee started the day strong and rose for the fourth consecutive session against the US dollar. It is now trading at about 71.80 against the greenback. But here's the top story that we're tracking for you today. Tata Sons board members are in a huddle in Mumbai, with the jet deal talks believed to be the key issue on their agenda. Sources say Tata Sons chairman N. Chandra is likely to apprise the board on developments with respect to Jet Airways. Shares of Jet have been surging for the past 1 week on the hopes of a takeover by the Tata Group. Now, the stock has gained by over 40% in the past 5 days alone. Utkarsh Chaturvedi and Nisha Podar join us with more on this crucial Tata Sons board meeting and the Jet Airways deal buzz. Utkarsh, coming to you first, you are at the Bombay House where the board meeting has been taking place. What's the latest there?
It's almost been 4 hours. The meeting started at around 12 o'clock. It is almost 4. The meeting is on now. As you said, the top topic of Jet Airways was on the agenda for today's board meeting. But remember that what's on agenda today is not the final approval. The approval which N. Chandra will be seeking today will be of going ahead with the negotiations with Jet Airways. It is not the final approval. Once the approval comes from the board is when the talks between Jet Airways and Tata Sons will start. Remember that what Tata Sons is looking at is a stake in Jet Airways, and what is lucrative in Jet Airways is the international routes the company has, the kind of intercode agreements they have with a lot of international players. Also very important is the 2 international hubs which Jet Airways has at this point of time, which is Amsterdam and Abu Dhabi in partnership with Etihad Airways. So these are the things which are more lucrative for Tata's, but then with that also comes the heavy pile of debt with Jet Airways, which will have to be sorted if Tata's come on board. We will have to wait and watch how soon does the meeting end, and then we can really come up and tell you what has been the results there.
All right, Utkarsh, thank you for bringing us that report from Bombay House. But there are more developments. Sources tell CNBC-TV18 that in the interest of the deal, Tata Sons and Naresh Goyal are working towards a middle ground on the contentious issue of Goyal continuing to hold a minority stake in the merged entity post the closure of the deal. Now, Nisha Podar is here with more details on those talks between Tata Sons and Naresh Goyal. Nisha, what have you picked up?
So I have been speaking to sources with direct knowledge of the development between the Tata Sons Group as well as Jet Airways. And sources with direct knowledge have shared with us that both Tata Sons as well as Naresh Goyal have engaged in settlement talks to resolve the issue, which could be a potential deal breaker in this particular case. So what we are gathering is that both of them are on the table to really negotiate the important issue and the contentious issue of Naresh Goyal wanting to stay on in the merged entity Vistara Jet post the transaction and also retain a board seat on that merged entity. Now, that is something that Ratan Tata had probably expressed a reservation towards, and that is something that both the parties are trying to resolve at this point. Now, when coming on the negotiation table, there has to be a step back from both the parties, and we gather that a middle ground is something that they are trying to strike at. Sources with direct knowledge share with us that as far as the settlement talks are concerned, the arrangement is concerned, it is likely that Tata Sons is deliberating on giving a board seat in lieu of a minority stake that Naresh Goyal and his family may retain in the merged entity Vistara as well as Jet. But on the other hand, that board seat is only limited for a particular time period in which the family really owns that particular stake, and that has to be limited in nature. We also gather that Tata Sons is likely to have all the rights for the sale of Naresh Goyal's stake in the merged entity after a few years, which will also be defined. They will not only have a right of first refusal, but also may retain the right of being the sole buyer for that stake as well. So with all those conditionalities is something both Tata Sons as well as Naresh Goyal are right now talking, but there are many moving parts. Ratan Tata, Tata Sons board as well as Naresh Goyal have to come on the same page for this particular issue to be resolved.
All right, so many moving parts of this deal that still have to be closed. Nisha and Utkarsh, both of you, thank you very much for joining in and bringing us the latest. And there's a flash on your screen right now which says the Tata Sons board meeting has indeed just ended. We'll bring you more details from that board meeting through today. But we've also been speaking to many experts on what they make of the ongoing deal talks between the Tatas and Jet Airways. For instance, former ED of Air India, Jitendra Bhargav, believes that a deal will be a win-win situation for both the sides.
You should be willing to give away your stake for Naresh Goyal. Is he willing? Because when he's been a promoter, he's nurtured the airline. So it's a tough call. But when you look at the reality, he's left with very little options. And Tatas have been passionate about the aviation, there's no denying. But considering the desperate situation the Jet is in, I think Tatas will go for it because it's a win-win situation.
All right, from one important board meeting to another, and that is the RBI board meeting scheduled on Monday. Now, markets and economists have been anxiously tracking this meeting, and this RBI board meet that's scheduled on the 19th of November, which is the coming Monday, is going to be a crucial one. The government, through its board members, is expected to raise some key issues regarding capital, liquidity and PCA norms. Now, this meeting holds significance as it comes amidst the ongoing rift between the government and the Reserve Bank over a whole host of issues. Lata Venkatesh joins us with more on what is to be expected from this meeting. Lata, what will be the dominant themes that will play out between the government and the RBI in this important board meeting?
Well, from the various public statements, it appears that at least 5 contentious issues will be raised at the board meeting. The first of them is the minimum capital that banks are required to keep. The Reserve Bank's rule for the last 20 years has been that 9% should be the minimum capital, but Basel rules, which is the internationally followed norm, require 8% capital, and that's what the government has been insisting on. It's expected that the board will also insist that RBI bring down the capital requirements so that banks can lend more. The RBI stands so far, and so far for the past 20 years has been that in India more capital is needed because it is very difficult to retrieve defaulting assets. The legal process is extremely long and cumbersome. The opportunity cost of money is high as well. The transaction costs like stamp duty, etc., are very high. So you can't really retrieve as much assets as you can. Loss given default is very high. They also point out that many Asian and emerging market countries have between 9 and 11% minimum capital requirement. The next contentious issue will be the prompt and corrective action filters. A bank is put into prompt and corrective action regimen or straitjacket if its capital falls below a certain level, if its net NPAs are higher than 6%, and if it's making losses for 2 years in a row. The government has been insisting that all over the world, it's only the capital filter that's applied, and therefore RBI too should remove the other two filters. RBI is insisting that provisioning in India is very, very little compared to global standards. Globally, in many dispensations, many jurisdictions, as soon as a loan goes bad, it's provided for 100%. In India, you provide 15% in the first year, and therefore, on an average, it's only about 50% that's provided for. A third contentious issue would be liquidity. Now, the battle began with arranging more liquidity for NBFCs. Chances are that may not be insisted upon, because even lately, most bond market guys, including the much respected Keki Mistry, have pointed out that the NBFCs have found most of their commercial paper getting rolled over. So liquidity is not the problem it was a couple of months back. Therefore, the stress may be on generally providing more liquidity. The RBI has done open market purchase of bonds, but the government and its nominees and the board could insist for more. They could even insist on a CRR cut. A fifth and very important point of discussion would be a package for MSMEs and SMEs. The package could be in the form of a demand that the capital that must be set aside for a SME loan may be brought down. At the moment it's 100%, which means you have to provide 9 rupees for a 100 rupee loan by way of capital. That the demand could be that you bring it down so that banks give more loans to SMEs. It could also be that classification of a loan as an NPA be extended to non-payment of interest for 180 days instead of the current 90 days, because SMEs by their nature are in a difficult terrain. It could also be a one-time restructuring. The last point, which was supposedly very contentious but may take a back seat, is the capital that the Reserve Bank has and which the government thinks is extra. Reserve Bank is seen as an overcapitalized central bank. That may have gotten toned down in recent days. We have heard the government saying that they don't want the RBI's capital, but they want a framework to analyze how much capital the RBI should keep. So some discussion on that is likely. Be that as it may, there are divergent and fiercely divergent views, and hence it could be a contentious board meeting.
Top story for you today, the Tata Sons board meeting. That crucial meeting has just gotten over, and you can see some of the visuals from the board members leaving the Bombay House just a few minutes ago. Now, the Tata Sons headquarters, Bombay House, is where the board meeting was being held. Now, the Tata Sons board members, remember, were in a huddle in Mumbai with the jet deal talks believed to have been the key issue on their agenda today. Sources say Tata Sons chairman N. Chandra is likely to have apprised the board on developments with respect to Jet Airways. Shares of Jet have been surging in the past 1 week on hopes of a takeover by the Tata Group, and that stock has gained over 40% in the past 5 days on the back of these deal talks. And you can see some of the board members exiting after that very important board meeting, but we're yet to hear what transpired in today's meeting. We do understand that an announcement is still some time away, although the board has started discussions, but there are several loose ends to be tied, including the role that Naresh Goyal will play post the closure of the deal. It is understood that Naresh Goyal wants a board seat, and that is something that the negotiations are still on about, and that is Zia Modi, one of the board members, also exiting now that board meeting. We'll wait to hear more from our reporters who are on the ground about what they have picked up, about what transpired in today's board meeting. Remember, a very critical one. This is the first board meeting meeting between the Tatas and the Jet, where this deal has been brought up, and we'll continue to revisit that story through the day. But for now, the Yes Bank stock also tanked about 7% in trade today and was the top Nifty loser. And this is on the back of news that ex-SBI chief O.P. Bhatt, who was an external expert on the bank's search and selection committee, resigned from that role. Now, the offered reason for his resignation is conflict of interest, but we spoke to our sources and we understand that one of the 10 shortlisted candidates for the role of a CEO is a senior executive from Standard Chartered Bank, and given that Mr. O.P. Bhatt is also an independent director on the board of StanC, there was a clear case of conflict of interest, because of which he chose to resign. And separately, we also understand, and this is something that my colleague Sonal Sachdev had picked up earlier, is that Standard Chartered was a little upset about O.P. Bhatt's role in Yes Bank, given that the bank was not made aware of O.P. Bhatt joining that search and selection committee, and that perhaps could also have played a role in him leaving that search and selection committee. But the process, of course, will go on. The Yes Bank is projecting a strong front as of now. People in the know have told us that the selection process for the bank's new MD and CEO is on schedule, and the selection committee meet on November 2nd, and thereafter on 13 November had shortlisted some candidates as well. Now, the big development from the court space, the Supreme Court today asked the exiled CBI chief Alok Verma to respond to charges levelled against him by the Central Vigilance Commission. Now, terming the 50-page report as a mixed bag and exhaustive, the Chief Justice of India, Ranjan Gogoi, told Verma's lawyers that further inquiry was required into some of the charges. Ashwat Kumar, who was at the courtroom, joins us with more details. Ashwat, what were the other key takeaways from today's hearing in the CBI matter?
Right, for just the benefit of our viewers, the report that is being spoken of is the CVC's investigation report into the allegations against Alok Verma. Keep in mind that the Apex Court was the one that had directed the CVC to go ahead with this probe, the caveat being it would be headed by a retired Judge Justice A.K. Patnaik. Now, that very report was submitted on Monday earlier this week before the Apex Court, and today was, of course, the hearing. There was a great deal of expectations in terms of clarity that was expected from the Apex Court on the way forward. What we have instead were observations falling from the bench headed by the Chief Justice. Justice Gogoi observed that there appear to be some findings within the CVC report. He's gone through the report. There appear to be some findings which are favourable, which are complementary to Alok Verma. There are other findings on some charges which are not so favourable, or which are uncomplimentary. That's the word that had been used by Justice Gogoi. Essentially, the prayer that has been put across by the CVC is that the time wasn't enough, that there are some charges which require further investigations, and that they would need more time. Now, the Apex Court remains silent on the prayer for more time. What it has done instead is that it has taken that report and served it upon Alok Verma. Alok Verma will now have to come back and to clarify on the questions, charges that have been levelled, findings of the CVC probe. Alok Verma's counsels will have to come clean on that. Meanwhile, Asthana's counsels were also present in the court. They made a vociferous claim, also seeking a copy of that report. Their prayer was explicitly rejected by the Apex Court. The Supreme Court has only served a copy on Alok Verma. He has time till Monday to come back with the reply. On Tuesday, on November 20th, is when the hearing resumes in this case. Back to you.
All right, Ashwat, many thanks for joining in. But with that, we've come to an end of this edition of After the Bell. Stay tuned to CNBC-TV18. Up next is our weekly show, Taking Stock, where we take stock of the week gone by and prepare you for the coming week.